Hey guys, welcome back. Very serious things happening in Australia. Okay, will be kind of not funny videos today. Nothing. Well, no. Okay, kind of serious what is happening here. So stay with me until the end that you will know what is affecting Australia. Okay, I have two pieces of paper I wanna talk with you today. But first of all, please subscribe to the channel, give us a thumbs up on this video, share this video with your friends. It's always good to share. Sharing is caring, as was they say, right? And this is good content. Okay, we're here every day, every single day. We are uploading good content, good videos, editing, and all for free for you. Okay, so the at least thing you could do to us is just give us a thumbs up and share this video for us to get views on the video. All right, simple as that. It doesn't charge you anything to do that. Now, yesterday we did have the RBA rate decision, right? They came in, they've paused the rates as widely expected. Then we had the rate statement, then we had the monetary rate statement. And it's just a disaster what is happening. All right? It's just a joke of what is happening in Australia. They don't have any clue on what is happening with inflation, where the inflation is going. They have targets that I've never seen that before as a analyst, as a trader. I've been in the market for professionally 2 years, but you know, widely 4 or 5 years now. It's just out of sense. Okay, very dangerous, to be honest, on what is happening. We have Australia and RBA doing those little things, those little papers as I have here, and then you have real estate market to the roof. You have inflation is too high, lots and lots of things. So stay with me. I will disclose all of that now. Okay. Before we start, actually, I have some things that I want to mention here, and one of those is that the RBA repeatedly mentioned that inflation is coming down. Yes, we all know that, from 7.8 to now 3.6. It's still out of what RBA is expecting it. Okay, because the target range is between 2 to 3%. So therefore, there is 0.6% of a reduction on inflation yet. Remembering that every central bank has different inflation targets. Therefore, we need to maintain ourselves updated. But for the RBA, it's 2 to 3%. Okay. Right now we are at 3.6 on the last release. The consensus was 3.4. The previous was 3.4. Expected no changes. It came higher than expected. Okay. RBA have mentioned that multiple times. If you want to read with your own eyes, if your own mind, just type on Google RBA rate statement. First link will be there. All right, Reserve Bank of Australia, the actual official website. If you read that, you will start to notice that every time they mention inflation, they will say it's high. Inflation, it's high. Inflation is not coming along what we're expecting. And this is what scares me. Inflation is not coming down as we expected. If it's not coming down as expected, and then they go there and they lie on the report saying that inflation is good, what's the balance here? That's not crime, right? Because they are the RBA, so that's fine. Don't worry about it. But if it was a normal citizen, oh my goodness, don't tell me, right? Anyways, they say here, and I will, with the exactly same words, the process of returning inflation to target is unlikely to be smooth. What does that mean? Well, it basically means that we're not going to have a soft landing that they were telling us. Wow, surprise, right? No, not a surprise. Not a surprise at all. When you have inflation bumpy like this, when you have GDP bumpy like we have, when you have negative retail sales, you have people losing jobs, this is not a surprise. Okay, and they put here as it was, wow, this is a big thing. It's not. Come on, tell it. Tell it, tell the market. And then you're going to see your Aussie dollar going down. You're going to see your real estate market collapsing. Why don't you want to tell it? Because they don't want that to happen. Simple as that. Anyways, for you, if you don't know what is a hard landing or a soft landing, I will invite you now to go to the ACY website and then go into learn, right? Just learn on the top here, on the top of your mostly left, but sort of in the middle-ish, left middle will be on the learn. Just put your mouse on top of learn and then we will pop up a little window where you can choose market analysis, and then you wait. We're gonna go for another page, then you can click on my name, Lucas Santos, right on there, and then you will see the last one called the RBA decision to keep rates unchanged won't save the economy. Okay, you can just click on that one and the explanation will be there. So reading the RBA statement was sort of a horror movie. Okay, if I can tell you this. I have here 1, 2, 3, 4, 5 points that I want to mention. Okay, the first one is when they talk about the inflation trends. Inflation remains high but is decreasing at a lower rate than anticipated, as I've just mentioned. The consumer index, the consumer price index, the CPI, rose by 3.6% over the year to March to quarter, indicating a decrease from the previous quarter. However, underlying inflation, particularly in services, remains elevated and is gradually moderating. Okay. Impact of rates, higher rates. Higher interest rates have effectively balanced aggregate demand and supply. Really? I don't think so. Yet evidence of excess demand, then they come. Okay, sorry, my mistake. You guys, of course you would say that. The evidence of excess demand persists, along with strong domestic cost pressures, both for labor and non-labor inputs. Labor market conditions have eased somewhat but remain tighter than ideal for sustained full employment and target inflation. Oh, ooh la la. There we go. The problem is right here, ladies and gentlemen. The problem is right here. So they are expecting the market conditions to remain somewhat tighter than ideal. It's so interesting because they say tighter than ideal. They don't want to say we screwed up and the market will be really bad. They don't want to say that, but that's exactly what it's supposed to be here. For sustained full employment and target the inflation. So basically the central bank has dual mandate. Full employment while decreasing the inflation. So decreasing inflation plus full employment. This is two things very hard to maintain. Why? Because they have to control the supply and demand effects. If they can't control the supply and demand, then those two things won't be balanced. And if those two things are not balanced, then the economy will become a bubble. If the economy become a bubble, we go into a spiral inflation. If spiral inflation get affected by the public, by the services, by the manufacturing, then we collapse. Simple as that. Do I think it will happen? Probably not. But this is the seriousness I want you guys to feel. Okay? Economic outlook uncertainty. Again, uncertain of everything. They are uncertain of the rates, they are uncertain of the inflation path, they are uncertain of the economic, they are uncertain of the labor market, they are uncertain of the target range, they are uncertain of everything. So what are they doing? They're doing nothing. They go there, we pay them the salary, they don't do anything that help us actually get off from the inflation. What should they be doing? They should be spending less, okay, costing. When you are struggling with money, do you continue to spend money? No, you don't. You don't. You basically stop spending, all right? If you look to the BOP, the balance of payments between Australia and other countries, you can see that this is growing. This is growing. Is the GDP growing by consecutive quarters? No, it's not. It's decreasing. So inflation is not good. GDP is not good, but we will continue to spend to generate more inflation as we're trying to stop the public to spend. But no, we're all right. We will continue to print money. So what's the constant between this? There's nothing. Nothing. Literally nothing. okay? Anyways, they say that the outlook remains highly uncertain, with recent data suggesting that achievement the target inflation won't be a smooth process. Again, they say this again. Forecasts indicate a return to target range between 2 to 3% by the second half of 2025. So that means a year and 3 months from now. Wow. With uncertainty surrounding services inflation and household consumption growth. They go ahead. Prioritizing inflation. Returning inflation to the target range is board primary objective, aligned with the RBA mandate for price stability and full employment, as I've mentioned. Medium-term inflation expectations align with the target, but the pace of inflation decline remains uncertain. It's at least the 5th time they say uncertain, okay, in only 2 paragraphs. The board remains vigilant to the upside risk and will rely on involving risk assessment and the data determining the appropriate path for interest rates. Global economic factors. The global economic outlook presents uncertainties. With improvements in some economies, but heightened geopolitical tensions persisting. The RBA will closely monitor global developments alongside domestic economic indicators and in decision-making in the process. In summary, they don't know what they're doing, and this is all. What do I think they should be doing? I've already mentioned, reduce costs, reduce effectively on the cost, and don't give more salary for those people. Because if you give more salary, this is more inflation getting triggered, okay? Because there's more spending then. But anyways, I have my views on the economy. You may have yours. This is just a information video, and I suggest you to take your own opinions based on what I've mentioned to you and take your own trades based on your own opinion. My opinion is, if you haven't watched my video from yesterday, I highly recommend. This is where I mention about the Aussie dollar, okay? Aussie dollar is completely falling. I got the trade wrong. It's okay, all right? But there's a big but here, and the reason why the trading is the Aussie dollar is falling is because US dollar is going up, and as well, China is not doing too great at this exactly moment, this week. So we may have a retracement on Aussie dollar, but after reading this, it's very hard to long Australian dollar at this moment, in my opinion. Guys, we're going to have the webinar tomorrow, so if you haven't participated on the webinar, this is where I discuss the geopolitical, the macro, the fundamental of what actually moves the market. All right, so if you want to know what is moving the market in 2024, in this week especially, then be there. The way to do is just register for it, all right? In the description of this video, you will find a link that will redirect you to the website, from ACY website, and then you just wait a little bit. Sometimes there's too much traffic going on the website, too much people going on there. So you just wait a little bit, 30 seconds, 40 seconds sometimes it can take to load the page, and then you click on my name and then register for tomorrow. Today is the 8th of May, May 8th, so we're gonna do one on the 9th tomorrow. All right, guys, hope everyone is safe out there. If you have any questions, please put down in the comments and I will answer that. And please tell me, what do you think about this? Put down in the comments, what do you think is going to happen with the Australian economy? What do you think is going to happen with the Aussie dollar against other currencies? I want to know your opinion, all right? And share this video with your friends. And again, give us a thumbs up and subscribe to the channel. I see you in the next video, and have a good day, a good night, and a good week ahead. See you. Bye-bye.